Hey, so if you follow anybody really in lending or real estate, or really if you've just been following the media, watching the news, you've been hearing the word inflation over and over and over again. And if you're someone that is waiting for mortgage rates to go down to buy or sell a home, this is the video for you. We may have reached a point where mortgage rates have peaked, but I also want to curb some of that enthusiasm and also really break it down so that you understand from a fundamental level how mortgage rates are tied to inflation and why inflation is such a big deal. And also the correlation to the Fed. There's been a lot of talk about Jerome Powell and the Fed raising rates, and I feel like 97 to 99% of people don't even know what any of this means. They just go to the gas pump and it costs a lot more to fill up your tank, or they go to the grocery store and it costs a lot more to fill up your cart. So a huge number just came out today, and that's why you're seeing a big media push today, is the CPI number came out today for October. And you'll see it here. CPI is the Consumer Price Index. It came out at 6.3% for October. What that means is consumer goods cost 6.3% more than last October in simplified terms. This is all items except for food and energy. The food and energy ones were higher. That was about 7 point, let me find that. Sorry, I had it on my laptop. That was 7.7% if you include food and energy. That is the inflation number for CPI. The important piece, though, is that those numbers came in lower than expectations, which is why you saw the 0.25% drop in mortgage rates. Why is that number connected to mortgage rates? I'll explain that as well. So the expectation, though, on this CPI number was 6.5%, came in at 6.3%. With food and energy, the expectation was 8%, and it came in at 7.7%. So once again, to curb some of the enthusiasm, though, it is still 6.3% and 7.7%. That is still a massive number, right? If you look at inflation numbers before, look at all these ones and twos, right? That's when mortgage rates were low. They were in the high twos, low threes, right? So we are not going to see mortgage rates absolutely plummet to the fours by tomorrow, right? We need that inflation number to go way lower than the sixes for us to even see any relief on that. Why is that, right? What is the connection with inflation, the Fed, and mortgage rates? So where that comes in is the 10-year Treasury. The 10-year Treasury is a great indication of where mortgage rates are going. The reason why is that the 10-year Treasury is, the Treasury, it's basically one of the safest investments that you can make in the U.S. Government. That is fighting for investments against mortgage-backed securities, right? However, where inflation plays into that number is this U.S. Treasury, the yields on that need to be higher when inflation is higher, which means mortgage rates need to be higher. Because remember, mortgage rates and the 10-year Treasury are fighting for investment. So if the 10-year Treasury goes up, right, mortgage-backed securities need to go up, and those mortgage yields need to be higher, right? How inflation plays into this is, let's say that, I'm going to the grocery store and it costs me 6% more to buy the same bar of soap, right? I'm less likely to have that disposable income, and I'm less likely to invest into a Treasury note or a mortgage-backed security unless it's got comparable investment yields to inflation. Because if inflation is, let's say, 6.5%, and my U.S. Treasury is giving me 4%, right? I'm really losing that 2.5% because that money just sitting in my account, right, with inflation is going to lose 6%. But if I invest in the U.S. Treasury, I'm losing only 2.5%. That U.S. Treasury, though, is only 1%. There's no way I'm investing in it, right? So that's why inflation really drives the U.S. Treasury notes up, which drives mortgage-backed securities up, which drives up mortgage rates. The Fed's involvement is the Fed keeps increasing the Fed funds rate. And mass media and everyone will say, oh my gosh, the Fed increased the rate. I'll get calls, right? Oh my gosh, our rate's going up because the Fed increased 0.75 of a point. The Fed's fund rate is tied to credit cards, auto loans, right? Any of those sort of debts, it's not directly tied to mortgage rates. The Fed is trying to slow down consumer spending to slow down inflation. The Fed is trying to create unemployment and slow down spending, right? They're making it more expensive for businesses to operate by increasing the Fed funds rate because it costs more to borrow. And they're also slowing down consumer spending because not as many people are going to take out a home equity line of credit and, build out their house and spend all this money on materials because their HELOC rate is based on that Fed funds rate, right? So the Fed is trying to help us out with slow down that inflation number to get it back in check because since really, middle of 2021, this inflation number has started getting out of control, and it's been absolutely out of control in 2022. So until this inflation number gets way down, back to normal, maybe cut in half, we are not going to see mortgage rates absolutely plummet. Because remember, mortgage rates are not going to go down until we start seeing inflation going down because of the tie to the Treasury, the 10-year Treasury, and mortgage-backed securities. Okay. Hopefully that was helpful. If you're someone that's got questions about getting pre-approved or where mortgage rates are going to go, this may be the peak. This may be the one number that sets the pattern for this downward trend. But I also need to curb the enthusiasm that just because mortgage rates went down by 0.25% to 0.5% today doesn't mean that's going to be a daily occurrence. We've got more inflation numbers coming out next week. And obviously we've got midterms and a lot of political and economic factors that are playing into this that could drive mortgage rates one way or another. So stay on your toes. If you've got any questions for me or any ways that I can help you buy or sell real estate, let me know. Happy to help.